I see it clearly in my daily departed. Sometimes I wish you could have seen me when I started. I know it took me a long time, a long grind going to it. A lot of long nights I put into it.
Hey guys, welcome back to Andrew's Finance for another episode of Finance Fridays. So last week we discussed Investing 101, which generally goes over the general tips for investors who are beginning to invest in the stock market. But I do want to say that while those may be really good tips, there's not one general principle that works for everybody. So today we're going to get into different kinds of investors. We're going to talk about what you can do and how investing can work for you. And we're also going to talk about the goals that you can assign to certain portfolios so that you can maximize the biggest amounts of money possible in order to achieve your financial goals at the end of the day. So let's get into it. Now, generally what I mean by that is, when it comes to investing, you kind of have to assign a goal to what you're trying to do. Most people just want to invest to build generational wealth, which is something that I feel like we should all advocate and strive for. However, there are certain cases or certain goals that we have that we just can't naturally reach by saying, hey, I'm just going to invest my money into this or that. So your goals or your investing strategies have to align with your goals. So in my case, one thing I know I want to do is I want to be a homeowner. So I know that in order for me to safely invest my money, I have to invest in something that not only rewards me for investing, i.e. through dividends, but also is going to give me a good sense of growth while minimizing my risk. So one thing I want to say that we have to keep in mind of is our risk factor. Your risk factor determines how risky your investment portfolio would be. So granted, keep in mind, the riskier you are, the more potential you have for rewards. However, the more potential you also have to lose. But as long as you're being a smart investor around it, you should be able to prepare your portfolio for anything that can happen to you. So if I know that I'm investing with the intent to purchase a home, I know that my goal is not going to happen for like another, I don't know, let's say 10, maybe 15 years. So realistically, I can afford to be a lot more riskier with my money because I have such a wide a range of time to be able to not only recuperate whatever losses I may take, but I just have 10 to 15 years to build my assets. So when it comes to deciding what you want to invest for, I always say pick a decent timeline. Like, you want to be aware of how long you have until, just so you know where you can put your money. So for people who have a lot short-term goals and they want to not only preserve their capital as well as minimize their losses, one place that you can do is you can always invest in bonds. So Investing 101, which has taught me like a lot of really good strategies about investing, one of the things that I've noticed is that you can buy a bond that'll be issued to you at, I don't know, let's say the year 2021, and you can buy it for a set period of time. For, let's say you put in $7,000, and whenever that bond matures or like it finishes, they reward you with a lot more money than you initially put in. So people who have a pretty wide timeline of being able to invest their money, but they don't want to have to worry about losing money, bonds are the safest way to go because they not only preserve capital, but you also get small incremental increases on what you initially have. So it's a good strategy for people who have short-term goals because you don't have to worry about losing money all too quickly. Now, for other investors who are more so worried about being able to maximize their gains, the biggest thing that you can do is put your money into an ETF. So an ETF will manage a sector or a specific area of the market, if you want to say it, into one big fund. And the way that works is that you'll be able to invest your money there, and then your money will grow as that sector grows. So if you want to, again, make the most gains possible, put your money somewhere where you know that's going to always have high growth. So if you wanted to invest your money into the tech sector, the biggest way and the fastest way to do so would be to buy the fund XLK. XLK manages 5 of the most highly traded tech companies. So you'll see Apple, you'll see Microsoft, you'll see Nvidia, and you'll see Adobe up there. And granted, tech being the biggest room of growth for the past 15 years or so has yielded about 691% return for just any general investor. So your biggest area of growth going forward is going to be tech. Now, another big area that growth investors can focus on is marijuana.
Weed, really?
With the decriminalization of marijuana for the past 10 years or so, it's become a really hot topic in the stock market. So everybody's looking for like the next weed stock to be profitable. There's several different ones. There's Canopy Growth, there's Aurora Cannabis, and then there's a fund that even manages the sector called YOLO. YOLO has tracked several different marijuana ETFs, and over the past year or so, they've yielded a 46% return. So not only have they been shown to be profitable in a new sector that everybody's trying to figure out what's going to be good or what's going to be bad, with that ETF, you're getting exposure to pretty much every single marijuana stock that they can track. So not only are you seeing small individual returns on those stocks, but you're seeing a big overall return on that ETF purchase. So one of the best stocks for growth investors to buy going forward. So I know we mentioned last week that IPOs are kind of the best time to get in on stocks, but sometimes IPOs don't always pan out. So did you know that there's a fund that tracks IPOs as well? So also for growth investors and people who want to be able to capitalize on investments in the market right now, there's a stock actually called IPO that tracks the fund and is a sector of IPOs. The stock has had tremendous growth over the past, I want to say, year or so, rising from $22 all the way to currently tracking at $75. So for people who are looking to add growth to their portfolio and be able to see a decent sized return on investment, IPO is also a pretty good way to go as well. Okay, so in closing, we covered two major topics. People who want to invest in the market, and then the goals that you want to assign to your specific portfolio. So for, again, more conservative investors, you want to go with more so zero coupon bonds. Those are the bonds that you'll buy for a certain dollar amount and you'll get a return already guaranteed on that bond already. It'll reduce you from seeing any market volatility and you'll automatically be getting a return on your money. Now, for people who are looking for more growth, you're going to be looking at a lot of ETFs that manage sectors and funds because those will open you up to more growth without necessarily having to pick individual stocks. There's no portfolio or no perfect suggestion that works for everybody. Everybody goes with their own timing and their own pace. But just keep in mind, as long as you're investing smart, you'll get to where you have to be. Remember, always do your research. Never buy stocks because you're just hearing about it. And again, always know that when you're buying a stock, think about how long you're going to be holding it for. Not every stock is going to turn out to be the next great big thing. However, if you expose yourself to a wide variety of them, you'll be able to reduce your risk. So that way, if you're ever losing, you're always winning somewhere else. Thank you. Remember, the goal is never to be rich, it's to be wealthy.
I see it clearly in my daily departed. Sometimes I wish you could have seen me when I started. I know it took me a long time, a long grind going to it. A lot of long nights I put into it.